Welcome to Trading Lounge and the US stocks for the 10th of June will be Wednesday, so we'll be looking at Microsoft, AMD and Tesla. So starting with AMD here on the daily chart, we were looking at this particular pattern here, either as an A and a B and a C wave to here, or an ABC DE triangle pattern that can finish in here and then move up. So we'll be looking at both of those. We're currently long and we'll look to stay long because from wave 3 to wave 4 here we'll be looking for a new high above wave 3 here. So we'll just simply stay long for this, and let's go in and have a look. So on the 4-hour chart here, we can count it in a couple of different ways here. We can count it, not that it matters, and we can count this as an A and a B and a C and a D and an E wave in here for wave 4 sitting in here. And I kind of like this because what it will do, it will give me 1 and 2 in here, nice strong third wave here, be a fourth and a fifth wave here. So roughly around the top here we'll see an impulse wave up here, and then we'll see a pullback for wave 2, then 3, 4, 5. So that will take us higher. The targets up here that we should be looking at will probably be at 62, and possibly if things extend further with the NASI and all the rest of it, well then we'll end up at the medium level here, 65. Currently the levels that we're working with here is 1, 2 and 3 here as group 1, the midpoint here, and then 58 here. So Fibonacci numbers 1, 2, 3, 5 and 8. And yeah, let's drill in and have a look at the next count with this here, which can be counted like this here. So we've got wave 3 here, an A wave here, a B wave here, and a C wave here. The problem with the C wave here is we're left with 3 waves here. That's why I don't particularly like this, but I think it's for the meantime anyway, we'll just track both counts. Both counts should be taking us higher, and let's just travel with that. So in this case we could look for wave 1 here, and that would leave wave 2 sitting here for this, and then that would be wave 1 and 2 and 3 and 4 and 5 coming up through to here. So 58, we can always expect 8, always consider 8 a profit taking number. Okay, so it's just that most of the orders will line up around 8, so people think more about 8 than they do at 7 or 9. And you'll see it all the time in stocks. It could be 8 cents or $80 or 800 or 8,000. Wherever there's an 8 heading up there, you'll see orders build up in the market depth around that. But this also leaves us probably around the 62 mark here, because if we consider this wave 1 here and 2 here, then we'll consider this wave 3 moving up here, which is logical, and wave 4 would see a sideways pattern across the top here, pinning it down from the number 8 here, the profit taking number, and the old high here, and then pushing up higher here. And 62 is kind of a special little number because it's, you know, when we're using Fibonacci as a price ratio, 1, 2, 3, 4, 5, 8, 13, 21, 34, 55, 89, 144, well then, you know, we come into 62, which if we're using it as that sort of percentage there, well then that's a 61.8%. So in geometry terms, we could be sticking at this number. So we'll just keep an eye on that, but we'll just track the wave count to the upside. Currently we're long in this market, so we'll just stay long with these 2 positions here, and we'll get a bit more space there. You can leave the stop under we don't want to get too close to the market at this point, so we'll just leave it. I'll just leave it under here. Once we've had our first correction here, and then we move it up there. Otherwise, you're just tempting fate at that point, and you'll get hit more often than not. And I mean, if you wanted to lock something up, you know, get your stop closer, well then you may as well just take some money off the table up here. It's just much tidier. So look to take a percentage if you don't think you can handle the heat of any pullback or whatever. So that's that. I'll just save that, and we'll look at Microsoft next. So M for Microsoft. Just go back to the daily chart here for a moment. So this is where we're looking here for this. So we're looking at wave 1 and 2 here, and then all of wave 3 to take us up to the 200, a major trading level. And yeah, so let's go in and count this to the upside. We're also long in this stock here as well. So we'll move into the 4-hour chart. So just basically here we've got 1 here and 2 here, and we're going from 2 up to 3 here. And in 3 we're looking for 5 waves of 1 and 2 and 3 and 4 here and 5 here. Now I know that can be an error here because wave 4 here can overlap wave 1 here. So I understand that. So that means that the count is probably not right. But what I like to do in these instances, I like to stay on the cautious side. So have lower expectations of how high the market can go and just stay with the evidence and keep moving along. But this is the problem here for this. So this could be labeled differently in a series of 1s and 2s to go even higher. But I think for our purposes, using the trading levels, we've got support on 80 here, and we're looking for a move up into the 200. The 190 will give us a bit of peg us here for a little bit, but it will be resistance for a while. You'll see some vibrations there, and then eventually it will find support on top of 90, and then it'll be sucked up to the 200 there as the psychological finishing line. So this is all of group 2 here. So in the trading levels we've got, say, from 100, then we've got 200, the medium levels halfway through, but from this point, from downwards, we've got 110, 20 and 30 that make up minor group 1, and then 50 that makes up the number 5 that makes up the midpoint, the medium level here, and then we've got number 8 after that. So 1, 2, 3, 5 and 8 here. So you can see the market's been, really played out across here, but it's moved from resistance to support. And then we're just buying new highs from that point. So it's kind of a simple pattern, but it's worth getting your head around. It's a classic trading levels pattern, as I call it. And when we look to go long to buy new highs here, so we'll be able to move our stop up here now for this. So I'll just pop it there for a moment until we've had a good look at this here. And can I go to the hourly chart here? I think I can on this. Well, nothing much to see there, so I'm just going to go to the tick chart to see if I can pick it up here. Right, okay, I've done my homework, so that's good. So I'll just bring in a bit more data for this. So from this wave 4 that we're looking at, I'm looking at this is wave 1 here, an A wave here, a B wave here, and a C wave here. Now, I don't know if that's right just yet, so I may have to pull this back in over here for this, but and have this as a series of 1, ABC back for 2, then up for 1 and back for 2 and up for 1 and back for 2, which will give us a much bigger move to the upside there. But like I say, I like to stay on the conservative side just to keep expectations in check. And with that in mind, what we can do from this point, we can look at wave 1 and 2 here and 3 here, and we'll get a bit of a dance across the 190 area through here. I'm thinking 3, 4 and 5, and then come back and test it again, and then we can move up from that point. So these will move up higher from that point. They'll take us up towards the 200 perhaps. So steady as she goes, Captain. And we want to, our next step in this game is the 190. And the question that you have to ask yourself, do you have support at that, at that point in time? So we look at the classic trading levels pattern, which is this, the arrival at the 190, the reaction, the first high above the level, then an ABC correction, and then we start to move in. So generally speaking, we exit here, exit the long trade here, and then we get back in over here. that's what we would normally do, but 190 is not worth working with. If this was at 200, well, this is definitely what we would do. The variation on this pattern here is that we don't get that extra low coming in through here, but it doesn't matter because we have that as a trigger and then we have that as the trigger there. So we can add to the position. So you can add to the position if you wanted to here. So if I draw this out here, this would be the arrival here, then the reaction here, and then the first high above the level, then an ABC pattern here, and then we can move up from that point. So trying to recognize that, you know, and you go along at these points, you can go along in here as well. You can go along on here. So you can, the idea of group 1 here is to build long trades in on the 90, on the 1, 2, and 3. If you get support, tested support on top of group 1 here, then you know you're going to get to the 5 at that point. But you should really have all your trades in at the beginning of the trend of this particular structure. So always in group 1 you build in the trades, try and get 3 or 4, 2 to 4 trades in there, and then you can also add at the midpoint if you want, and you start taking profit at number 8 and the 200 here. This is where you start scaling out from at this point. So that's that. So what we can do, we can safely bring the stop to under here. We could bring it up to here a little bit further as well. So we'll keep it under the 86, the 186. So if I come back to the 4-hour chart, it's good to keep stops on the, it's good to keep stops finishing in 6 or 2 on the long side. So we can put, I'll just leave it there for the time being. At least we've locked it in, you know, that's good. Okay, so the next position we're looking at is Tesla. So just give me a second to organize my world. And there's Tesla. So I'll just stay with this chart. This is a 4-hour chart here. We're looking at 1 and 2 here, then 1 and 2 and 3 and 4 and 5 here for the third wave, the fourth wave here. And then we had wave 1, 2 here, and we're looking to buy new highs here for this, so we can move this up to break even here, and we'll take a closer look at that in a moment. But here's number 8 again. So 8 is a profit taking number, and you can see it being hit here, and it is resistance here, isn't it? But over here it becomes support over here. So we would have had this, I can't remember if I did, but my thinking is pretty much always the same. I would have had it here, here, and then dragging it down to here. So that's what's occurred. If you were there, I would have dragged it down to this one here. Woulda, coulda, shoulda. I wasn't there at the time. I wasn't there, officer. Whatever. We're looking at this structure to the upside here now, and our target is here. So in a nutshell, we want to take profit at 1,000. We know that the market can go higher, but there's going to be a lot of buying and selling occurring at that particular level. So we don't really want to be involved in the swings of it all. We've had our fair share of the pie, and 1 is the strongest number in the market. So we're definitely going to see this third wave here, if we get there, play out and come back for the fourth wave, which would bring us back, if all things being equal, if I take it to the 1,000 there, that will bring it back into this level here. So it could drop down a little bit further than that there too. So that's the 38.2% retracement level. So it could move back to that point. Obviously we need to track that, but that's something that you need to consider. And then the first high above the level. We could trade this one up here once we understand this one if you like. But yeah, that's where we are with that at the moment. So can I go into the, I have to go to the tick chart here now for this. Let's go and get a bit more data in first. Okay, that should be enough. So picking it up from this wave 2 here, I'm looking at this as wave 1 here and 2 here, and then 1 and 2 here. This is 100 ticks, and then wave 3, ABC for 4 here, and I was just assuming that was wave 5 here with 1 and 2, 1 and 2 and 3 and 4, 5 for the third, fourth and fifth. A little bit short here, but the spike still gives us that high there. I mean, we could go higher here. I mean, Where's wave 1? Okay, let's just map out a few possibilities here. So first of all, roughly here, we could pull back to the level here. We could pull back to the 900 area through here. We wouldn't want to see it going anywhere. So we could bring our stops under this level here. In fact, well, wave 4 can pull back to the wave 4 of 1 lesser degree here. But this market will be looking at the 1000. That's what it wants. So we'll keep our stop out of the way here for the time being, because that's been tested as support. You know what I mean? So we're still in this trend here, but it could pull back to this point. The other thing it can do from here too is that this little move I've got up here can just be wave 1 up here, or that would probably be 1, 2, 3, 4, and 5 here. So some sort of ABC back again. So we could look at it like this here. If this market moved beyond, if it moved past the 61.8, if that became the resistance, that number there, then you know you're coming down further from that point. But if it finds support here and starts to move up here, then you could also go long above here again. For that, I'll put that in there. Put it just as a green trigger. This is also, you know, this just to point out here from the 900, which is a medium level, to the major level here at 1000. The levels we've got before that, we've got 1, 2, and 3, 5, and 8. They're the Fibonacci numbers, but we've got 1, 2, and 3 here, which make up group 1. And then we've got the midpoint, and then we've got group 2 here, so 65, 72, and 80. It's really handy if you break, you know, when you get a whole number like this here, and then you break it down into the levels here, because you can break it down further, a lot further, into fractals, which is handy, because because it's a game of support and resistance. Then you can break the problem down. So like I know that 5 is the second strongest number. So I know coming up here that the bids will get hit here. There'll be profit taking here. But if I wanted to have a long trade at this number, or then I'll just wait for this until I could recognize that it's got support over here. Trading above it's not support, it's got to come back and test it. But that gives us our signal to the upside at that point. But otherwise we'll be looking at this moving lower through here in 3 waves. So if I can just borrow this here, and we'll look at. So we have a plan for the short side and we have a plan for the long side here. We're going to keep our stop out of the way because we're going for the longer haul here, and we'll end up being somewhere like this here. So if it gets support here and moves up, you know what to do, and then it'll be 1, and 2, and 3, and 4, and 5, and moving up that way. In the meantime though, if I come back to 4-hour chart here, come back into this. So we know that the market could possibly come back down to this level here. So, well, that's quite a long way down, isn't it? So what we could do here is, if that 61.8% is breached, that little, as I mentioned before, then lock in a little bit of profit from that point. So I'll put it over this side over here, so we know where it basically is there in there. I mean, I'll probably forget, but at least the main point is that you know, and I'll probably, yeah, do something different, but at least you know what I'm thinking, because otherwise this, we don't need this anymore here. So what we're looking for here is just a little move back into this space here, and then up into here. That's what we're looking for. And then we're looking for another move down like that. So that's our target. We'll keep our stop just above break even. We don't want to be stopped out by a pullback here. The wave 4 can pull back to the wave 4 of 1 lesser degree, but yeah, it's a long way. We'll see how it goes. We don't want to get stopped out though. That's the main point. So lock in a little bit there, and we can always look to build back in as well. We can buy back in this space as well. All right, I think I will just leave it at that. Great. Alrighty, thanks for tuning in, and thanks for supporting Trading Lounge. We really appreciate it. Cheers.